नमस्ते दोस्तों, आपका वैल्यू एजुकेटर चैनल में स्वागत है, जहां आप सीखते हो स्टॉक मार्केट में निवेश करके आप कैसे पैसे बना सकते हो। तो मेरा नाम है शशांक और ये वीडियो में हम ऐसे एक फार्मास्यूटिकल कंपनी के बारे में डिस्कस करेंगे कि जिनका 2023 फाइनेंशियल ईयर का जो रेवेन्यू का टारगेट है इट इज ऑलमोस्ट $1 बिलियन एंड इफ दे एबल टू अचीव दैट टारगेट देन इट विल बी अबाउट मोर देन 50% ग्रोथ कंपेयर टू लास्ट फाइनेंशियल ईयर। तो ये जो कंपनी है जिसका नाम है लॉरस लैब्स, तो यदि आप लॉरस लैब्स के लास्ट 2-3 इयर्स के रिटर्न्स देखोगे तो दे हैव गिवन अ वेरी गुड रिटर्न्स और इसका रीजन है देयर प्रॉफिटेबिलिटी फ्रॉम 2019 टू 2021 हैज इंक्रीज बाय ऑलमोस्ट 10 टाइम्स। 2019 में लॉरस लैब ने लगभग 95 करोड़ के जो प्रॉफिट्स है वो पोस्ट किए थे। इफ यू कंपेयर द सेम नंबर इन 2021 तो ये जो नंबर है इट इज मोर देन 950 करोड़ एंड जो रेवेन्यूज है वो लगभग यही पीरियड में 2 टाइम्स हुए हैं। So I think Laurus Labs have done a fantastic execution in history, but the question is, can Laurus Lab able to execute similarly compared to what they have done in history? To understand all these details, please watch the complete video. जिसमें I will be explaining all the divisions of the Laurus Lab. It will be very detailed video. Laurus Labs के कौन से products है, उनके क्या divisions है और management का history क्या है and can they able to repeat what they have done in last 2 years? So make sure you watch the complete video and यदि आपने चैनल को अब तक सब्सक्राइब नहीं किया होगा तो जरूर सब्सक्राइब कर लीजिए एंड बेल आइकॉन पे क्लिक कीजिए ताकि ऐसे जो वीडियोस है वो आपको आगे जाके भी मिलते रहे। तो लेट्स नाउ डिस्कस इन डिटेल अबाउट द लॉरस लैब्स।
Laurus Lab is research-driven, fully integrated, end-to-end pharmaceutical company offering intermediates, APIs and formulations to generic and innovative pharma companies. Laurus Lab started as manufacturer of antiretroviral APIs and they have largest market share in these products. But they have now transformed into diversified pharma company. Today, 1 out of 3 HIV infected patients in low and middle income countries are taking medicines with ingredients supplied by Laurus Labs. Their clients include some of the world's biggest pharma players who buy pharma intermediates, generics, and contract manufacturing and development services from Laurus Labs. Laurus Lab follows the philosophy of R&D first and one quality for all markets. Their strategy is to get very high market share in whatever products they enter by having most efficient manufacturing processes, vertical integration and scale. The company was founded by Dr. Satyanarayan Chava in 2005. Dr. Chava is passionate chemist and has a PhD in organic chemistry. He has stated in his earlier interview that he still likes to spend about 20% of his time in laboratory. He started his career as a research assistant with Ranbaxy Laboratories, which was later acquired by the Sun Pharma. He later joined Matrix Laboratories, a manufacturer of the ingredients for the HIV drugs. He worked in various divisions there and eventually became a CEO of the company. Matrix was acquired by the Mylan in 2006. After leaving Matrix, Dr. Chava decided to start his own company with a focus on research. He initially had trouble raising funds from the bankers as his business plan was to lose 80 crores in first 4 years. He somehow managed to get loan from SBI despite this and later went on to raise the funds by selling equity to marquee investors like Fidelity and private equity firm Warburg Pincus. The company did an IPO in 2016. Dr. Chava's vision was to spend first few years of the company dedicated to only research and development. They would start manufacturing once they have most efficient processes. It is the vision that made the Laurus a completely integrated and lowest cost manufacturer of pharmaceutical drugs. The business of Laurus Lab can be divided into 3 broad segments: Laurus Generics, Laurus Synthesis and Laurus Bio. Under Laurus Generics, the company manufactures and sells generic APIs and formulations. Their API and formulation business can be further divided into ARV and non-ARV. ARV drugs are antiretroviral drugs which can be mainly used for HIV or AIDS. Under non-ARV, the company manufactures drugs in the oncology, diabetes, cardiovascular and gastrointestinal segment. Under the Laurus Synthesis segment, the company is involved in 2 businesses, the ingredients business and the pharma CDMO. Under their ingredients business, they manufacture specialty ingredients for nutraceuticals like dietary supplements and also cosmeceuticals, which are basically cosmetic products with bioactive ingredients. The ingredients business used to be its own separate vertical, but since the contribution from it was not very meaningful, it was merged with the synthesis business. The majority of the revenues in synthesis business vertical come from the CDMO business, where the Laurus Labs develops and manufactures novel molecules from the innovators and also some of the specialty generic products like steroids and hormones. They have created a separate entity for this business segment called Laurus Synthesis Private Limited, and their plan is to make it completely self-sufficient entity in near future, which is not dependent on the parent. This means that they will able to raise the funding on their own through debt or equity and will be able to service those obligations with their own cash flows. The third vertical under Laurus Labs is Biologics segment. In 2020, Laurus acquired a 72% stake in Richcore Life Sciences, a Bangalore-based biotechnology business. They are involved in manufacturing of cell cultures, ingredients, enzymes, and a CDMO of the recombinant proteins. The biologics business segment is currently not a major contributor to their revenues, but it is expected to contribute significantly from 2025 financial year onwards. Let's now discuss a little bit about the ARV drugs, which are biggest contributor to their revenues. ARV stands for Antiretroviral and are the drugs which are used to treat retroviral infections. They are primarily used for the management of the HIV or AIDS. It is important to note that ARV drugs do not cure HIV, rather they help manage it. The patient has to take the medication for the rest of his life, so the volumes involved in these drugs are usually very high. It is also important to keep the prices of these drugs as low as possible because HIV is a disease that is more prevalent in the low and middle income countries. Therefore, efficient manufacturing of the API for the ARV drugs is very important as the API makes 70% of the cost of the final drug. Large-scale efficient manufacturing of the API is critical to make the final drug affordable. The manufacturing of the ARV API is dominated by the Indian companies who purchase intermediates and KSMs from the China. Antiretroviral therapy usually involves a combination of 3 drugs. The HIV virus has the ability to become resistant to drugs. Taking a combination of 3 drugs greatly reduces the chances of virus becoming drug resistant as opposed to taking a single drug. Most of the purchase of the ARV drugs happens through the tender floated by governments of the various countries and global organizations. There are over 38 million people living with HIV in the world. About 2/3 of the cases are from the Africa. South Africa is the country with the most number of HIV infections at about 7.7 million. It is followed by the Mozambique and India at 2.2 and 2.1 million respectively. The top 10 countries with the most HIV infections are generally low-income countries and their government cannot afford to procure the drugs and stop infections by themselves. So a lot of funding of the procurement of the ARV drugs comes from the global organizations such as Global Fund and PEPFAR. Global Fund was established by UN to finance the treatment and prevention of HIV, TB and malaria. They operate in over 120 countries and provide funding to countries in 3-year cycles. PEPFAR stands for the US President's Emergency Plan for AIDS Relief. It is a US government initiative to combat the global AIDS epidemic. They operate in over 80 countries. Global Fund and PEPFAR tenders together are responsible for the majority of the procurement of the ARV drugs in LMIC markets. These tenders are not winner take all, where the lowest bidder gets the full order. The tender is usually split amongst 3 to 4 players, with the lowest bidders getting 30 to 40% share. The rest of the procurement is done through the in-country tenders. In-country tenders are mostly winner takes all, where lowest bidder gets the full order. The tenders issued by the South African government is the largest. In India, we have NACO, which is National AIDS Control Organization, and that does the procurement of the ARV drugs. There are 2 main types of ARV treatments, first line therapy and second line therapy. The first line therapy is the first choice of treatment for any disease and is most prescribed and widely used. First line therapies are generally lowest cost therapies and usually give the best results with the least side effects. Second line therapies are generally more expensive and used only when the first line therapies has failed. There may be cases where the virus has become drug resistant or the first line therapy is ineffective. In these cases, second line of therapy is prescribed. Second line therapies generally have more side effects than the first line of therapy as well. For example, average cost of the first line of the ARV therapy in India is about 5,400 per year, whereas the cost of the second line ARV therapy is about 17,000 per year. Laurus Labs has a complete portfolio of both first line and second line of the APIs. They are fully integrated player who has leading share in most of the first line ARV APIs. They have about 30% market share in tenofovir, emtricitabine, lamivudine and dolutegravir. In efavirenz, they have about 60% of the market share and are the largest supplier of the API globally. The company's strategy in ARV API is to become the lowest cost producer of the drug by having most efficient processes as well as the scale. They sell the ARV APIs to non-integrated players. These are the players who sell the ARV formulations but do not have the capabilities to manufacture the APIs. Laurus is an absolute leader into ARV APIs and supplies to some of the biggest players in the ARV space like Mylan, Cipla and Aurobindo. Since antiretroviral therapy is a combination of 3 drugs, these players source at least one of the APIs from the Laurus. Additionally, about 80% of the players who participate in ARV tenders purchase the API from the Laurus Labs. So it does not matter who wins the tender because they all buy the APIs from the Laurus Labs. Laurus is a process chemistry expert who is focused on R&D. Their biggest strength is their ability to innovate new processes for existing drugs. The best example of this is drug efavirenz, which was the most important drug used for the ART at the time. Laurus was able to innovate a new process for manufacturing a drug which led to significant decrease in the cost of manufacturing of the drug. If we use the price of 2009 as a base, we can see that they were able to reduce the price of the drug by 46% due to this technological breakthrough. But they did not stop there. Through the incremental innovation and scale, Laurus was able to reduce the price of the drug further to only about 40% of its price in 2009. Dr. Shava said in one of the interviews that they do not stop with the one big disruption. They keep on doing the R&D on the existing product to keep reducing the price of the drug so that they can become a global leader. Laurus has more than 60% market share in this product today. Another good representation of their skill in process chemistry was demonstrated in 2018 when they were having issues in procuring the intermediate for the product called amitricitabine. They had a contract with Aspen Pharmaceuticals of South Africa to supply this drug under a fixed price contract. But the price of the intermediate has risen significantly, which significantly affected their margins. Laurus was able to design a process to manufacture this intermediate in-house at a price cheaper than what their supplier could offer. Within 6 months, they were able to become completely self-reliant by using their existing capabilities to manufacture this intermediate. Prior to 2019, the WHO recommended first-line treatment for HIV. It was a combination of tenofovir, lamivudine and efavirenz. Then in 2019, the WHO recommended a change in treatment regime from efavirenz to dolutegravir. TLD is a much better treatment regime compared to TLE since it can suppress the virus in patient's body more quickly. It is also much harder for the virus to become resistant to DTG. It is also easier to stick to the regime as it has to only take once in a day and have a fewer side effect compared to EFV. This change caused a disruption in API revenues as Laurus was the largest producer of the EFV in the world. The volumes also dropped significantly as the previous regime of the 600 mg of EFV, whereas the new regime used 50 mg of DLT. However, DLT is higher value product and Laurus was able to become lowest cost producer of the DLT as well. In this chart, we can see the revenues of the business were very stable until 2019. In 2020, the revenues dropped due to change in first-line treatment regime for TLE to TLD. The revenues saw a strong rebound in 2021, partly due to the better realization of the DTG. but the majority of the increase was because of the increased buying due to pandemic. Previously, HIV drugs were dispensed on a 30-day basis to patients, while in 2021 the government started dispensing 3 months or 6 months supply of the drugs to HIV patients to avoid the need to stand in the line during the pandemic. This switch caused an increase in ARV APIs in revenues in 2021. In 2022, there was a lower uptake in ARV APIs due to excessive stocking. There has been also 10% decline in the prices of the ARV APIs in the past few quarters. Management has said that this will be the new base and they do not expect further reduction in the prices from here. However, the recovery in prices is also not expected. The next business segment for the Laurus Labs is the ARV formulations. Laurus Labs enter into this business segment to forward integrate their API business segment and receive better realizations for the APIs which they were already producing. As we discussed earlier, the manufacturing of API is a real challenge in ARV drugs, while manufacturing of the formulation was a relatively easier process. As Laurus Labs was already lowest cost producer of the ARV APIs, forward integration into ARV formulations increased their gross margins. They only produce the formulations for which they have the complete control of the value chain, which means they produce the intermediate, the API and the formulations. Almost all the ARV formulation business comes from low and middle income countries as the demand for the HIV drugs is most over there. ARV formulations are mostly sold to the tenders like we discussed before. These tenders are usually for the 3 years with the firm volume commitments. So in this business, Laurus has very good visibility in terms of volume. Another interesting thing about these tenders is winner does not take it all. The order is usually split among the 3 to 4 firms, so the company comes with a very low price, they only get 30 to 40% of the order at the best. So there is no incentive for the other companies to crash the prices. Apart from this, Laurus also does the contract manufacturing for the companies that win in-country tenders in which winner takes all the volumes. They have a contract manufacturing agreement with the Aspen Pharma to manufacture the TLD fixed dosage combination for the South African tender. Under this vertical, the main formulations manufactured are the TLD fixed dose combination, TLE 400 and TLE 600. If you remember from our previous discussions, TLD is now the main treatment regime in most countries. They also produce TLE 600 and TLE 400 as they are the largest producer of the efavirenz. TLE 600 was the primary treatment regime prior to WHO making TLD the preferred first-line treatment. However, some countries still use TLE 600. TLE 400 is prescribed to pregnant women and people with certain conditions as the TLD combination causes unusual weight gain in these patients. Currently, about 80% of the market is for the TLD combinations, whereas about 20% of the market is TLE based combination. If we take a look at the revenues from the formulations, we can clearly see the competitive advantage that Laurus has as a result of their backward integration. In 2019, total revenues from the formulations was only 46 crores, which grew to over 1800 crores in 2022. Prior to 2019, Laurus was only API company. They had done significant capex on the formulation side for 5 billion tablets which was lying idle. This capex started to be utilized in 2019 and there was a significant ramp up from 2020 financial year. Today, formulations is their largest business segment and it contributed about 38% of their total revenues in 2022 financial year. In 2016, UNAIDS sets the target for 90-90-90 to combat HIV. Their target was 90% of the people who have the HIV knew that they have the virus. Of this, 90% of the people should be on the retroviral therapy and 90% of the people on ARV treatment should have the undetectable levels of the virus. In 2020, we were able to reach 84, 87, 90. The UN has set up new target for 2025 for 95, 95, 95. The UN also had a target of bringing down the new HIV infections to 5 lakh per year. They fell short of this target too, as there was about 1.5 to 2 million new infections. So there are about 1.5 to 2 million new patients being added to the treatment pool each year. This means that there is still room for the Laurus to grow in the ARV segment. The next business segment of the Laurus Labs is the Non-ARV API and formulations. This is a very important business segment as much of the growth over the next year is going to come from this segment. The key therapy areas which they focus on here is anti-diabetic, cardiovascular, proton pump inhibitors, central nervous system disorders, and oncology. So the strategy in this segment is very similar to ARV segment, where they focus on chronic diseases for which the patient will have to take the medication every day for his lifetime. So these therapy areas are generally high in volume and lowest cost producer can gain the significant market share. Some of the key products in these segments are metformin, pregabalin, gemcitabine, and montelukast. Dr. Shava has said that they are not interested in filing hundreds of DMFs and ANDAs. They follow last man standing approach, where they enter into high volume molecules and they try to gain the cost advantage through their process chemistry skills, which will help them to gain significant market share. These drugs are mostly sold in highly regulated markets, so margins are better compared to ARV drugs which are sold in LMIC countries. Currently, a very small part of the revenues comes from the US and the majority of the revenues comes from the Europe and Canada. They recently signed a multi-year multi-product contract manufacturing agreement with a European customer for supply for the formulations. They have validated 2 products under this agreement in 2022 financial year and the sales have been started from the Q1 of 2023 financial year. This contract is expected to contribute significantly to 2023 financial year revenues. Similar to their ARV business segment, they follow a completely backward integrated approach where they manufacture the intermediates that go into the APIs and they produce only those formulations where they manufacture the APIs. In Q2 2022 financial year con call, the management has said that they do not buy any intermediates and all their intermediates are manufactured in-house. They only buy KSMs and solvents from China. So increase in commodity prices affects them to lesser extent compared to other manufacturers who purchase intermediates for the API manufacturing. Oncology API is very important business in the non-ARV segment. Laurus is one of the leader in this space. Oncology APIs are the high potency APIs. Companies need to make significant investments to set up the high potency API facilities. They have to make sure that there is a minimal human intervention as these compounds are highly toxic and there needs to be high level of automation. As a result, these products are very high margin products. The margins profile of these APIs are very different from the ARV APIs, which are the low gross margin products. Laurus Labs have the highest high potency API capacity in the country. It is easier to pass on the prices in the APIs as these are the very high value products. So the customer is not usually very price sensitive. The API makes a very small portion of the overall cost of the drug, unlike ARV drugs where the API makes most of the cost of the drug. The major product in this segment is gemcitabine, which is a chemotherapy drug and a very high value product. Laurus Lab have the highest market share in the world in gemcitabine API. Now let's talk about their synthesis business, which is the most interesting business of the Laurus Labs. This business segment has the highest margins compared to other business segments. The synthesis business of the Laurus Labs consists of the ingredients business and the CDMO business. Under the ingredients business, Laurus manufactures specialty ingredients which are used in nutraceuticals, dietary supplements, and cosmeceuticals products. The ingredient used to be in separate business segment, but as it was a small part of the overall business, it was merged with the CDMO business segment. The CDMO business consists of the generic CDMO and the NCE CDMO. Under the ingredients business, Laurus Labs have very unique capability called natural extraction. The main molecule in this segment is digoxin, which is the API extracted from the Digitalis lanata plant. Digoxin is used to treat various heart conditions. Laurus Lab have the contract manufacturing agreement with C2 Pharma, a European pharma company, to manufacture digoxin. Digoxin is a very high value product and there aren't a lot of manufacturers of this product globally. In 2016, C2 signed a contract manufacturing agreement with Laurus Labs and invested about $10 million to set up a manufacturing block dedicated for the manufacturing of the digoxin. This is an 1800 square meter block in Unit 4 that can meet entire world's demand for the digoxin. The ingredients business of the Laurus Labs is mostly mature and there isn't lot of growth expected to come from this business segment. Now let's discuss more about the CDMO business segment of Laurus Labs. The CDMO business segment initially was mostly generic manufacturing for Aspen Pharma. Laurus used to manufacture steroids and hormonal intermediates for Aspen Pharma, which was high gross margin products. The Aspen Pharma deal contributed to more than 50% of the CDMO revenues in 2020 financial year. The NC CDMO business segment have grown at very fast pace since then. Under this business segment, they provide clinical phase and commercial manufacturing of innovative drugs. Majority of this business comes from the US, Europe and Japan. Management has indicated that CDMO business is benefiting tremendously from the China Plus One theme. In 2022 financial year, they signed a multi-year partnership with a global life sciences company for several APIs. They are currently in the process of building dedicated capacities for this customer. Part of the capex is going to be funded by the customer advance and the customer will be funding the development cost as well. They currently have 7 commercial products, 4 intermediates and 3 APIs. This is the fastest growing business segment for the company and the revenues from this division have grown over 39% over the last 6 years. This is because they have been able to sign many new customers in this segment over the past 2 years. They are expecting many projects to go from phase 2 to phase 3 during this year and 2 to 3 products to commercialize over next 2 years. Most of the growth in business is expected to come from this business segment over next 2 years. Laurus Bio is the newest segment of the company. In Q3 of financial year 2021, Laurus has acquired 72% stake in Richcore Life Sciences for 246 crores and renamed the business as Laurus Bio. Richcore was a company that expertise in the fermentation technology and can manufacture animal origin free products for use in manufacturing of the biologic products. The strategic rationale for the acquiring this business was that Laurus believes that fermentation is very high growth area and they can do fermentation CDMO at scale. Fetal bovine serum is a serum that extracted from the blood of the cow fetus. This serum is used as cell culture medium for manufacture of the most vaccine. While fetal bovine serum is widely used in cell cultures, there is a chance of that it could carry some viruses that could then infect human beings. There is a risk that diseases that were not present in human and only present in animals could be transferred to human through this method. Richcore was started with the mission to replace animal-derived substances used in the manufacturing of the biologics to animal origin-free products. Today, some of their most popular products like recombinant trypsin and recombinant human albumin are being used to replace animal origin products in manufacturing vaccines and insulin. When the cell culture media are not derived from the animal origin, the chances of them being contaminated by a virus also reduces drastically. Apart from this, they are also in R&D stages for various animal-free proteins like milk protein, egg protein and silk protein. At present, Laurus Bio have 3 segments which are biotech ingredients, enzymes and recombinant proteins. Under biotech ingredients, they manufacture various cell culture media which are used in manufacturing of the biological molecules. Under enzymes, they manufacture various enzymes which are used for pharma, nutrition and industrial purposes. Enzymes are basically biological catalysts which can be used for various chemical reactions and in the manufacturing of the biologics. The last segment is the recombinant proteins. In this segment, they manufacture various biological proteins for use in food industry. They offer development and large-scale commercial manufacturing of food proteins. They are currently not involved in manufacturing of the therapeutic proteins for human pharma industries like monoclonal antibodies, but the long-term plan is that to start manufacturing those as well. Laurus Bio is a fully integrated biologics manufacturer just like Laurus Labs. Laurus Labs is a completely backward integrated for their formulations. They manufacture the intermediates, APIs and then the formulations. Similarly, Laurus Bio manufactures the ingredients and enzymes that are needed for the manufacturing of the proteins. So Laurus Bio has all the capabilities to become a completely integrated biotech company. Apart from this, the bio business also offers various synergies with the existing business of the Laurus Labs. They offer fermentation capabilities which are essential for the manufacturing of the steroidal and hormonal intermediates. They also have the enzymes which can be used to make the current processes of the Laurus more efficient, greener, and which can reduce the cost. Laurus Bio has two manufacturing facilities, R1 and R2. R1 is their facility for small batch manufacturing and has a fermentation capacity of 10,750 liters. There they have two fermenters of 5,000 liters each and three fermenters of 250 liters each. This facility also have the in-house quality control lab for chemical and microbial testing. They also commissioned a commercial scale facility in 2022 financial year called R2. This facility is going to be used for commercial scale manufacturing and CDMO. They have 4 fermenters of 45,000 liters. So the total fermentation capacity in this facility is 1.8 lakh liters. They have firm commitments from the customers and the facility is going to be fully utilized. 2023 financial year will be first year where the full effect of this facility will show in revenues as the fermenter came online in mid 2022 financial year. So this vertical is expected to show strong growth in this financial year. During the last year, Laurus also completed a strategic investment in startup called as ImmunoAct. They invested about 46 crores for 26.62% stake. This will just be a passive investment for now as this technology is still in the research phase and company has no plans to consolidate in the company. As a show of confidence in the investment, the senior management of the Laurus Lab investment their personal wealth and purchased 5.64% stake for 9.75 crores at the same price and terms as the companies. The management has said that they will be investing up to 10% of the company's annual profit into disruptive technologies of the future. ImmunoAct indigenously developed CAR-T cell technologies. CAR-T stands for chimeric antigen receptor T cell. T cells are the part of human immune system. They are a type of white blood cells which is produced naturally in the human body. CAR-T cells are generally engineered T cells which are used to kill cancerous cells in body. In this type of therapy, scientists harvest T cells from people, genetically alter them, then infuse the CAR-T cells into patients to attract the tumors. The problem with the traditional cancer therapies like chemotherapy is that it is toxic to the healthy cells as well as cancer cells. CAR-T cells can be engineered to target only the cancer cells and are not toxic to the healthy cells in the body. CAR-T technology has shown a lot of promise in treating cancers in the US. But the cost of such a treatment in US is equivalent of 3 crores in India. This price is not affordable to most people in India. ImmunoAct has indigenously developed a platform that can offer a similar treatment for 30 lakhs, which is 1/10 of the cost of the US treatment. Their main therapy, HCAR19, has completed phase 1 trials and seeking for the approval for the phase 2 and phase 3. If all goes well, it can be commercialized in next 18 to 24 months. Laurus Labs have the state-of-art manufacturing infrastructure. They have a clean compliance track record and all their facilities have been audited by most of the regulatory agencies without any observations. Their plants are regarded as some of the best chemical plants in the country and have won several national awards for the safety across all chemical plants in the country. Most of their manufacturing infrastructure is located in Visakhapatnam. In Jawaharlal Nehru Pharma City, they have Unit 1, Unit 3, Unit 5 and Unit 1 for Laurus synthesis. These facilities have capabilities to manufacture API and also used for the CDMO vertical. Unit 5 is a SEZ facility and it is dedicated facility for the manufacturing of the products for the Aspen under the contract manufacturing agreement. LSPL Unit 1 is a dedicated manufacturing facility for the synthesis division. In APIIC they have Unit 2, Unit 4 and Unit 6. Unit 2 is a dedicated formulations facility and Unit 4 have the dedicated block for the digoxin which we discussed before. Unit 6 is the US FDA approved facility for manufacturing of the intermediates for captive consumption. They have Kilo Lab in Genome Valley where the pre-commercialization activities for the synthesis division and APIs are carried out. They also have the APIs and intermediate facility which they acquired from the Sriram Labs. And lastly, Laurus Bio has the two facilities R1 and R2 which we have discussed earlier. The company has always been aggressive with the capex. They have invested heavily whenever they see the opportunity. Their capex usually happens over 2-year cycle and then they sweat the assets over the next year, causing a big jump in revenues and profitability. From 2018 to 2020 financial year, the company has created enormous capabilities in Formulations division. As the utilization of these two assets increased, there was a big jump in revenues and margins in 2021 due to operating leverage. Then in 2021, the company committed about 700 crores of capex, which was later revised to 1200 crores in 2021 and 2022. They increased their API capacities in Unit 3 and Unit 4 by 1000 kiloliters, which is about 20% of their API capacity. This capacity came in second half of 2022 financial year. In Unit 2, which is their formulation facility, they doubled their capacity to 10 billion units. Management have said that they have commitments from the customers and this facility will be fully utilized by Q3 of 2023 financial year. In the synthesis business division, they set up a dedicated plant. Until 2022 financial year, they were using a fungible API capacities to manufacture the synthesis division products as well. They have now set up a separate subsidiary named as Laurus Synthesis Private Limited for the synthesis division. They will be investing heavily to create exclusive capacities for the subsidiary. All three expansions were brownfield, so they had no regulatory issues to bring the plants online. Under the bio segment, they built the R2 facility in 2022 financial year with 180 kiloliters capacity, and we will see the full effect of this facility on FY23 revenues. Now the company has committed 2000 to 2500 crores of capex in 2023 and 2024 financial year. There will be additional 1200 kiloliter capacity coming online by the end of 2023 financial year. This will increase their API capacity by another 15%. They are also going to set up another 2 greenfield plants for API in Unit 7 and Unit 8, which will come online in 2024 and 2025 financial years. They have acquired a land for these sites. One of these facilities will be animal health API and will be online in 2024 financial year. They will also be setting up the another greenfield site, Unit 9 for formulations, while currently they have only Unit 2 for the formulations. So they want to build another site to de-risk the formulations business. Major part of the capex will go to the synthesis business division, where they are setting up the 3 greenfield sites and very large dedicated R&D center. As mentioned earlier, they want to separate the synthesis business from API business, and for that they have exclusively building the capacities. The dedicated R&D center will be used for the synthesis business for the R&D and scale up. It is expected to come online by FY23. Unit 2 and Unit 3 for the synthesis business division will come online by 2024 financial year, and Unit 3 will come online by 2025 financial year. The new facilities will have capabilities to handle sterile, hormones and high potent molecules. Part for the funding for this capex will be done through customer advances. And lastly, in the bio division, they have the plans to increase the fermentation capacity to 3 million liters. They have already acquired the land for this capex and the construction will be beginning shortly. The first phase will be 1 million liters and it will be coming online by end of the 2024 financial year and will be fully utilized in 2025 financial year. The revenues of the company were steadily increasing up till 2020 financial year. In 2021, there was a big jump in revenues due to utilizing the formulations capacity. The revenues are expected to take a big jump in 2023 financial year as well, as management has given a guidance of $1 billion in revenues. They had given this guidance 2 years ago when the dollar was about 73 rupees. So the guidance for the FY23 is about 7,300 crores in revenues with the EBITDA margins of about 30%. The margins for the company have been trending upwards as well. There is a steady improvement in the gross margins due to better product mix. As the share of the formulations and CDMO have increased in recent year, the gross margins have seen the steady improvement. There was a steep change in EBITDA margins in 2021 due to the company utilizing the formulation capacity that they had built over the previous years. Management has said that the long-term EBITDA of the company is expected to be around 30% range. Here we can see the change in product mix that has caused the improvement in margins. In 2016 financial year, the company derived most of its revenues from the ARV API segment, which is a very low margin segment. As the share of the formulations and CDMO business has increased, we can see the drastic improvement in the margins. The management has said that the synthesis business, which is the highest margin business segment, is expected to contribute 1/3 of the revenues in financial year 2023. The management has said that $1 billion target will be achieved easily as they have the capacities and the order to achieve it. In quarter 1 of 2023 financial year, the company has the revenues of about 1500 crores. This means they have to grow by 67% over 9 months to achieve this guidance. They will be sweating the capexes which they have incurred in previous year. They have doubled their formulation capacity, which contributed 38% of the revenues last year. They also have 20% additional capacity in API business segment. Management has said that most of the sales in the formulation business segment is going to come from the non-ARV segment, which has a higher margins compared to ARV business segment. The contract manufacturing deal with the European customer is expected to ramp up significantly in 2023 financial year. They also have the several new customers in synthesis business division and are expecting the significant number of projects to move from phase 2 to phase 3 and are expecting some projects to commercialize. When molecule move from the phase 2 to phase 3 and then get the commercialized, the growth in business does not come in percentage, but it can come in multiples. And lastly, biological business segment revenues were marginal last year, which are expected to grow significantly as the new capacity is online. The management is very optimistic that they can able to meet the guidance of $1 billion revenues with 30% EBITDA margins. Here we can see the effect of operating leverage on ROCE. Laurus had jumped in ROCE in 2021 financial year, similar to what they have guided for financial year 2023. Their gross block grew at 20% CAGR until 2020, which then was utilized fully in 2021 financial year. Their gross block has grown by 23% in 2022 financial year compared to 2021. So they have the assets for the operating leverage to be played out in this year. The management is very optimistic that they can do what they have done in 2021 financial year again. Beyond 2023 financial year, the management have been investing aggressively for 2024 and 2025 financial as well. They have said that ARV business segment will stabilize around 3000 crores and most of the future growth will be coming from the non-ARV segment. They also expect significant growth in synthesis business division in 2024 and 2025 financial year as more products are commercialized. They are undertaking significant greenfield capex in all divisions which will be coming online in 2024 and 2025 financial year. Management has said that they want to enter into sterile manufacturing, but as they are R&D company first, they have begun R&D on sterile and they will be launching it when they have the competitive advantage through their R&D. Management has said that similar to the previous capex cycles, the growth of the 2024 financial year over 2023 financial year will be flat, but 2025 financial year growth will be significant, just like previous years where the growth was very high one year and flat for the next year. So to summarize the strength of the businesses, Laurus has the best in class management who are very aggressive in investing for the growth. They are a process chemistry expert and gain competitive advantage through superior manufacturing processes. They have a R&D first approach and they spend heavily on the R&D to gain the advantage in manufacturing. They are completely backward integrated and they have a better control on their supply chains compared to their other competitors. And they also have the very clean compliance track record with no regulatory issues. The management is highly focused on the quality. In recent con call, management has summarized their right to win. They offer their customers niche capabilities and they can do it at scale. They have capabilities to do chromatology, biocatalysis, fermentation hydrogenation, continuous flow chemistry, and very low temperature chemistry at scale. So while other players can offer capabilities, large scale manufacturing with these capabilities can be challenged for them. Finally, let's discuss about the risk this business can face. The management is betting on the growth from the non-ARV business segment. If their key molecules were to face price erosion similar to ARV drugs, it could lead to decrease in revenues and margins. They also can face a competition risk in CDMO and high potency APIs. Recently, a lot of pharma companies have been entering into this space, which could erode their competitive advantage. And lastly, the company faces risk from the regulatory agency inspections. While till now they have the clean track record, any shutdown in facility will reduce the revenues and margins and can also cause a loss of business.
तो यदि आपको भी ऐसे बिजनेसेस में इन्वेस्ट करना है कि जो अब तक ज़्यादा डिस्कवर्ड नहीं है, उनके वैल्यूएशंस डिसेंट है एंड जो ग्रोथ रनअवे इन फ्यूचर दैट कैन बी ट्रिमेंडस, So for the same reason I have started the micro cap club. यहाँ पे we are going to only focus on very small stocks and जिसके जो valuations है right now which are the decent valuations. So यदि आपने अब तक micro cap club को join नहीं किया होगा, so you can join. You will get the link in description. There will be a lot of discussion about the what stocks I am buying in my personal portfolio, which are very small and currently at their growth stage. Along with that, there is a separate discussion group which I have created on Telegram. So you will be added in that separate group also. So you can check the link in description to join the micro cap club. And यदि आपको ये वीडियो पसंद आया होगा तो जरूर इसे लाइक कर दीजिए, मेरे चैनल को सब्सक्राइब कीजिए और बेल आइकन पे क्लिक कीजिए ताकि ऐसे जो वीडियोस वो आपको आगे जाके भी मिलते रहे। और जरूर ये जो वीडियो है वो आप अपने सारे फ्रेंड्स के साथ शेयर कीजिए ताकि उनको भी काफी नॉलेज एंड अंडरस्टैंडिंग मिल जाएगा।